Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 15th of December, 2021, 6:35 p.m. Central Time, and it was Fed Day. So before we go too far, I'll talk a little bit about what was going on. These are the highlights of the Fed meeting today. It will be in my full research. I put it here so you see the highlights. I certainly write about a lot of other things in my nightly research too. Suffice to say, at least two dot plots looking in 2022, maybe three, have moved over. The Fed's not sure. Those won't begin, those interest rate hikes from the looks of things, until anywhere between the second half of the year, something from June to December. You've got to look at the dot plots to see where they come out, and that's not going to be hard to see. If you take a look at the other part of the market, they kept the Fed rate unchanged right now. They voted 11-0 for the whole thing, and they decided on the tapering, and they went taking out of Treasuries $20 billion a month and out of mortgages $10, starting mid-January. And the Fed said very clearly, the Fed chair, they are not going to raise interest rates until they're through with the tapering program. Well, why would you raise interest rates while you're still putting money into the economy and you're trying to slow it down? So the logic of that, if you need to understand that, you got to go back to basics 101. I wouldn't even begin to get it. Some of the questions were great today in the question and answer period. Some weren't. Now you get to the second phase. There's the first phase. Actually, there was two phases today, and there's two phases tonight. The first phase today was the written announcement. The second part was the question and answer period by the Fed. So you get to see that. The markets, if you saw the reversals today, they were dramatic from low to high. We'll see them on the charts in a few minutes. I teach you don't go through these reports. I teach that even if you knew what the Fed was going to do, it's rare you'll get what the market reacts with to it. I mean, it's just that simple. Here the Fed saying we're going to raise rates, and you took off in the stock market. You'll see that metal market. It's one market after the other. Okay, but that's a rally tonight. Now you get the other two phases. Asia's open now, so they're digesting. Traders go to their desks, the research departments, everybody's digesting what went on. I know that you like to think traders are up 24 hours a day doing their trading. Nonsense. Not how it works. Right now, they're deciding what they do. And then the other shoe, the fourth step, is how does Europe react to Asia reacting to America? So we will wake up 5 in the morning and you could have a whole different look on these markets. You just don't know. But that's why you wait. You don't stand like somebody with my eyes wide open. I'm on a train track. Look, it's coming at me. I'm going to jump right in time. You're not going to make it. You're going to get caught on the track. Something's going to happen. You're stupid to be on the track to begin with, and that's why you walk away in futures from those type of events. Now, I know you're going to tell me, no, I caught that trade. Sure you did. And sure you catch them all every time you do it when you get these swings. I believe you. Okay. When we look at the S&P, you're now back up. If you were to finish out and trade right now, and a new all-time high close. Just yesterday, the market was trying to push through. This is last week. This is a weekly chart, remember. And this is where you're at right now for Thursday. Okay, not bad action. When you come to the dailies, let's go back. This is where you were the close of business Tuesday. This is where you were on the close of business Wednesday. We're now into Thursday. Are we going to be able to get through these highs? I don't know. Right now, what you're building here is a formation that, I'm going to get this one right, my friends. It's the beginning possibility of a shoulder, and a head. An inverted head and shoulder this time, where if you pick this up and you flip it, watch out. You could be looking here real easy at the easily 4850, 4900 range, if that occurred. I don't know if it'll occur. I don't know that it's there in that full formation yet, but it's happening. The formation is developing. When you look at the swing line, you don't have a trend. You have a lower low and a higher high, so you have a resistance point right through there. The market's fighting a battle at the 18-day average of closes. I call that the line in the sand. If you've taken my course, you know how that works. But speaking of that, you do understand we're having the live webinar tomorrow. So if you have any questions about the live webinar, and where's my invite if you didn't get one, and I sent them to everybody, just move your cursor up to the top of the page. At any point here, you'll see an icon come on, click it, fill out the form, be in there tomorrow at 12:30, no later. I open up the chart room at 12:15, get it all set, and then at 12:30 sharply, I start recording. I am done by approximately 20 minutes later. I do not post it on the website. You either attend or you miss it. It's that simple. You clear your schedule. I've cleared mine to do this for free. I did enough. So that's where I'm looking at the market. Are we trending right here? No. You have an upside bias. If you rally any further, the 47.61.5 zone is going to be your resistance, the upper Bollinger Band. Again, yin-yang. You still want to see what Asia does later through the evening and then how Europe reacts to it in the morning. When you take a look at the slow stochastic, you are overbought. Overbought market, not with the trend, has some upside bias. In the NASDAQ, downtrend in the sense of, prior to today, let's do this, lower highs, lower lows. Yesterday's low did not quite hit that lower Bollinger Band. This morning, you didn't hit it again, and now you're right back to the 18-day average. So the trend is down, but the bias is up now because you're over the 18-day average, and momentum has been up, and it's still up at this point in time. Never did give that up, as you can see. When we come to the Dow, you fell back to that 18-day average zone. The market is now putting both numbers and trying to begin the embedded process. What does that mean? Let me get away from tonight's action and take you to yesterday, which is Wednesday, the day I'm recording, right? But you need both numbers to close over 80 to begin the process where if you do that for several days in a row, you shift from being overbought to locking in a bull trend. I think some markets are going to try that as they get towards that Christmas period. I defined yesterday the Santa Claus rally is traditionally the last 5 days of the year and the first couple of days at what time? Beginning of 2022. So we'll see if it can do that. Right now, I don't see anything. In the Russell, you've been in a downtrend. You didn't make it to the lower band. The window envelope certainly got hit. And now momentum's turning on you. Serious resistance up at the 18, the 100 in green, the 200-day average. Pros, are they going to wait to sell it there? Well, as long as you have any number under 30, they won't. So you have to have a pretty hard rally for them to look at it and decide. And I don't think they'll sell anything over the 18-day average. They might sell that number. Then we get to the VIX. And while it held beautifully, I want to show you this. We came down and I said, folks, and this was on Monday, this is an important number. If we break through that, are we going to go back into the 15, 14 level? Or is the market saying, because of the shift that we had all the way up there, we're getting a new level of volatility? If so, we should hold here and fight a battle between the 18 and these two averages, the 100 and the 200. This was Tuesday. Wednesday, you tell me what the market did. It doesn't get any better than this, and now the market's got to tell us what the story is. Are we trending? No. You have a lower low, higher high, battle zone, and oversold. I don't know what to do with it. Then we get over to the T-bond market. So the T-bond market is laying down here. It was interesting. Fed Chair Powell was asked a question about the curve yield, the inversion possibly, and so on. And his answer was they really don't look at it that much. I don't believe him, but that's what pretty much the answer was. Okay. The market is laying on this number, a close under both 161.10 and 160.26 with momentum already down. That gives you the bear signal. There'd be a heck of a risk because it's going to be back up one tick over that high, but it would throw the market into a downtrend. Nothing can throw it into an uptrend right now. The same goes for the 10-year. You have lower highs, lower and low. But in this market, this low of 129.31 is the key. You fell back, you got to today 130.07 and you're hanging here. If you take out that number, you'd get lower highs, lower lows by taking that out. Under these averages, you're opening the door for 129.02. Don't take it out, get through this high, and you open the door for the 131.13. I think we'll get a pretty good inkling tonight as to what they're going to do for early in the morning. In the dollar index, if you have taken my enhanced Bollinger Band course, $75, full of videos, things you've never seen, in my opinion, on Bollinger Bands. I've never seen it taught with what I'm doing. This is not your basic Bollinger Band course. I want to give you a doctorate, a master's degree in it, something different, and I think I've accomplished it. What do you do the first time you hit an upper Bollinger Band? I think the pros were gone. What do you think they did in the eurocurrency down there? So long, I'm gone. Same course, identical thing. British pounds, you got there, you're gone. History. And the markets come back up. Now you have to decide, you got tomorrow the Bank of England, you got the Bank of Japan on Friday, you got a bunch of other central banks, and the European Central Bank comes out tomorrow. Wow, what a day it is going to be. I'm going to have a ball with all this because at the live webinar, we'll be able to talk about all this. And remember, that's at 12:30. You click up there to get into it. Then Bitcoin. Okay, Bitcoin rescued itself a bit today. Now, if you take a look, you've been down and you came back. You're still embedded, so I think the pros are looking at the short side, but I don't think they're selling anything tonight. A 22 reading, if you finish like that, the odds favor you're going back up to challenge the 100 and the 18-day average of closes. Fail there, and you're opening the door again for 44.37.40. But when you're losing that reading, I don't have people putting on new short positions into that. That's what I teach. You can decide what you want to do. I talk about all this in so much detail in my morning subscriber video, where you get 20 minutes of me covering 40 charts at a time. Look at Brent versus WTI crude. My gosh, the market is just lost in no time at all. 70 cents on the differential. You're fighting your battle where we've pointed out here, the 18-day average of closes. Same thing in the WTI. Same thing, battleground, the heating oil, these two numbers here. Natural gas, you have a rally, it's still embedded. The pros are going to sell rallies here. Keep your eye on it. I told traders not to go through today's reports. When I put out my update, I said, I think you just clear the decks and you take a fresh look at everything come actually Thursday. Why? The yin-yang impact that we're talking about. So if you want to learn, you want to get somebody that maybe is a mentor to you. Gee, what does Ira think on this chart or that chart? I make it so easy because in my subscriber video, if you go to the website, you take your scroll bar, and as you move it on the bottom of the video, it'll tell you the grain section, the meat section. It's going to tell you the currency section, interest rates, wherever you want to be. You're not needing to run through a 20-minute video to get where you want to go. Next, I cover a mixture during the week of weekly charts and daily, and on the weekend, a full edition of longer-term trades based on weekly charts. Then I throw together the seminars, or the webinars as I like to call them. That's the newest word, right? And we talk about what to do. 40 charts, try to cover everything. And yes, if you're a subscriber, I get people that write me during the week. Ira, what do you think of this chart? I'll make a quick picture of the chart, show you what I'm seeing, and I'll answer your question. Tell me you get that from other services. I don't think that's the case. $7.95. What do you got to lose? Go to the website under iraepstein.com. Take a look at it there. And remember, if you want to attend the live webinar tomorrow, just take your cursor, move it up. Everything will work. You'll see the icon. Click on it. I'm Ira. See many of you in the morning when we do the morning webinar. Take care.